I got to have even a better reason than that. Okay, so part three, resources. Huh. So this one is resources. I probably should put it up at the top. So resources is really crucial. It's kind of like the location, and it's has the location's really crucial. So are the resources, because without resources you're just not going to have cash flow. So it really comes down to what are the properties, exactly what do they have. I mean, this is the the value of miners comes down to really two things: the price of gold and silver, and how much cash flow can they provide, or how much potential cash flow they can provide. And that comes from where? It comes from the resources. So you got to analyze that fairly significantly. Um, the different types of resources. So we have PMP, which is proven and probable reserves. You have M&I, measured, indicated, and you have inferred. So what are the definitions of each one? So we have the PMP. They have been deemed to be economic by a third party through either a pre-feasibility or a feasibility study. These are M&I. So PMP comes from the M&I. M&I is the starting point. So an M&I is not economic. An M&I has just been found in the they those that's the grade. That's what they found. Those are the resources. The M&I is what a third party has said. Okay, they have this. Then a PMP does a feasibility or a pre-feasibility and says, okay, this M&I or a percentage of it is economic, and those become reserves. Those are what a reserve is, just an economic resource, basically. Pretty simple stuff. And now, again, I mentioned M&I is gold in the ground or silver in the ground that's deemed to be reliable, based on by a third party using the drill results. So a company will drill a whole bunch of drill results and then hand those drill results over to a third party, and the third party will say, okay, this is the M&I, this is what you found, and then this is the inferred. So the inferred is deemed to be unreliable, or let's just say it's not deemed to be reliable. Not enough. It doesn't have enough drill results to be reliable, that I can tell you that that gold's there, if you will. It's just inferred to be there. Now, inferred usually comes from the resource estimate, but it can also come from management, just basically saying, the geology based on my drill holes, there's basically probably 1 million ounces there. And now they might not necessarily, they might only verbally say that, but so inferred doesn't necessarily have to come from drill results, although it normally does. But sometimes I will actually give a company inferred resources just based on the initial drill results, based on the geology. You can just kind of infer it out that they're going to find more. And if they're finding, fantastic drill holes, and they've only drilled, 20% of this strike, and it's the same geology, then you can basically infer it yourself. Now, historical resources, they're kind of a gray area. These are resources that have been, um, they were in the company before them, or even the company before them had a company do, but they're no longer considered M&I or PMP. They're just historical. And so, but some historical, depending on how long ago, they were, deemed reliable. So a lot of times the length, and so you'll see a lot of historical resources, and those were based on third-party analysis. But again, they're no longer, because time has went by and now it's a new company. So generally, what happens is when it shifts from one company to the next, they have to go out and kind of redo it, depending on how long ago it was. If a company buys a company, but if a company, like kind of goes bankrupt and that property just sits there forever, and somebody comes in and buys it, then at that point they're called historical. Again, it's kind of a timeline thing. but you'll see historical a lot. I actually think that inferred is actually kind of more reliable than historical. These are kind of one level below. These need to be validated, if you will, to some degree. We can need some drill holes or whatever. So that's historical. Grade usually determines the quality of the resources. And I have a slide where I'm going to show you, it's kind of a reference chart on how to identify grade, good grade, you know, uh, poor grade, excellent grade, stuff like that. So I'll show you that slide if you can, if you can last long enough. So we're on slide 9. We got to go to 44. So this is a long presentation. Can't think of it as a class. um, Low grades are dependent on offset metals, something you always need to be aware of. If you're bullish these offset metals, then you can rely on them. Me, I'm not so bullish, so I kind of get nervous when I see that they're relying on these offsets for their low cost. Right now, we're going into a bull market for commodities, and so these offsets are actually going to should help a lot of these miners. So me being conservative, and some of my stocks that I've been conservative with will probably do better than I anticipated. A lot of times I will not include these offsets in their resources, but I will include some of it for lower cost. But you have to be wary of companies who list their resources in either AUEQ, this is gold equivalent, or AGEQ, because sometimes it's not necessarily economic with only the gold or silver. It's dependent on these offsets. So you need to be aware of that.